talk about the most seductive, sticky trap in trading. No, not over-leveraged gold scalps during CPI news. I mean the real assassins. One that doesn't show up on any chart is the ego boost you get after a win. You feel sharp, powerful, like the market should start calling you for signals. And that's when you make your worst decision. Not because your strategy broke, but because your brain got high on its own supply dopamine. That's right. We are talking about the trader's equivalence of drunk texting, except instead of texting your ex, you yell along on Tesla at local resistance. Welcome to the confidence trap. Let's break it down before it breaks your account. A 2021 study on Chinese IPO winners uncovered something wild. These traders hit the IPO lottery, basically luck. But did they celebrate quietly? Nope. They went full-blown trading gladiator. More trades, more risk, less sanity. And surprise, they lost money. Not because they had more capital, but because their confidence inflated faster than a meme coin in a bull run. This is what behavioral economists call the illusions of control. You win a trade and suddenly your fib level is gospel, your intuition is divine, and your laptop deserves a shrine. But wins, especially random ones, don't make you better. They just make you bolder, which is not the same thing. Barber and Odean's classic studies back this up. Overconfident traders trade more, perform worse, and spend the rest of the year apologizing to their equity curve. It's not about skill, it's about overestimating your skill, which brings us to the golden rule: ego is not an age, and confidence is not confirmation. Be honest, what's the weirdest thing you did after a big win? Raised your lot size? Bought crypto on a full moon? Drop your best "I was feeling myself too hard" trade moment in the comments. Let's hit you with the stats. FINRA reports that 72% of day traders end the year negative. And guess what? Many of them started green. Their crime? Winning. And then trading like they just unlocked cheat codes. One behavioral study tracked traders who strung together 3 wins in a row. What happened next? They upped their trade size, took riskier setup, got louder on Twitter, and wiped their games like a toddler with finger paint on your profit and loss. Even FTMO and TopStep, the big leagues for funded trading, report the same pattern. Most failures happen after a winning streak, not from lack of skill, from a surge of "I am the market god" syndrome. It's not discipline that disappears, it's humility. Tell us, what's the most unjustified trade you ever made after a win? Like, "I was right once, so now I'm the chosen one" energy. Confess it below. We forgive you. So what do smart traders do? They force, oppose. Prop firms have built-in brakes. Hit the daily limit, you are locked out. Like a bouncer saying, "No more trades for you, sir." OKX now has cool-off modes. You can literally block yourself from trading after a big move, because apparently we need babysitting after profits. There is even tech for this now. Fractal cooldown adjusts your stop-loss logic once you are in profit, like a digital whisper, "Hey champ, don't blow it now." Top coaches preach the same. Reset, downsize, journal. Steenbarger says, after a win, flip from gut mode to grid mode. Get analytical, get boring. Basically, become the opposite of what dopamine wants you to be. Pro tip, withdraw part of your gains. Touch the money. Feel the realness. Because if it is just numbers on a screen, your brain thinks it's monopoly money. Which is exactly how you end up buying top on a breakout with 5 lots during lunch. And if you need help staying grounded after wins or even managing risk without relying on fives, head over to StarseedFX.com. You can grab a free trading journal to track your wins and your overconfidence detours. Join our trading community where we keep each other humble and try our smart lot size calculator that adapts to your risk appetite. So your position size matches your plan, not your ego. Seriously, if your strategy is tight but your discipline's wobbly, that toolkit is your new trading accountability buddy. Back to it. This trap isn't new. In the 1970s, Daniel Kahneman and Tversky laid it out. Wins distort judgment. Period. Then Richard Thaler coined the house money effect. After a win, your brain treats new gains like casino chips. Easy come, easy gamble. Even Jesse Livermore saw this in the 1920s, said his worst losses came after big wins. Why? Because he got cocky, not cautious. This isn't modern psychology, it's ancient trading wisdom. The moment you feel invincible, you're already at risk. If you could go back in time and warn your past self after a big win, what would you say? Stop trading, you beautiful fool. Withdraw and touch grass. Type your funniest time travel warning in the comments. We will vote for the best one and hang it in the Trader Museum of Regret. Let's go brain deep. Neuroscientist Molenberghs showed that confidence hits the same reward circuits as chocolate, music, even drugs. So yeah, a big win literally gets you high. And when that high peaks, your prefrontal cortex, the brain version of a risk manager, starts napping. Ragatti's research shows overconfident traders have less brain activity in decision-making areas. Translation, dopamine parties while you risk control takes a coffee break. Steenbarger again. Use System 2. That's your slow, methodical brain. Because System 1, the fast, emotional one, is too busy planning its next revenge trade victory lap. Now, let's be fair. Not all confidence is evil. Albert Bandura's theory of self-efficacy shows that moderate confidence improves performance, reduces hesitation, helps you act. Singer's team even found confidence lowers stress and enhances flow if you don't overdose on it. But trading is an Olympic sprint. It's a math-based grind. And as Gao's study shows, even one lucky break can wrap your risk lens. While some confidence fuels clarity, too much fuels chaos. And chaos pays no one, except maybe your broker. Time to bust myths faster than a margin call. Myth 1. Winning means my system works. Nope. One win isn't a pattern. It's just noise with a good PR. Myth 2. I earned the right to trade bigger. Sure, and I earned the right to eat cake for breakfast. Doesn't mean I should. Myth 3. Confidence is always a strength. Tell that to your prefrontal cortex after a dopamine spike. Confidence without calibration is just gambling in a tuxedo. Myth 4. Veteran traders don't fall for this. Yes, they do. They just recover faster and have rules to catch themselves mid-spike. You know the real red flag? When you feel too good after a win, that's when you need a ritual, not another trade. Here's the summary, except longer, because nuance matters. Confidence is a tool, not a GPS. After a win, your brain will lie to you. It will say, double down, go again, you have cracked the code. Don't listen. Instead, pause, downsize, journal, withdraw, walk away. Treat each win like a glass of wine. Celebrate, but don't chug the bottle. Because trading isn't about feeling good, it's about staying sharp. Your edge doesn't come from ego, it comes from execution. And the moment you start believing you are untouchable, that's when the market touches you with the margin call. Okay, legend, if you have made it this far without opening a new trade just to prove the point, I salute you. Because surviving your own confidence spike, that's trader maturity. Or at least emotional babysitting. If this episode gave you a mini ego check or at least stop you from doubling your lot size on a 5, do the honorable thing and subscribe. It costs nothing, unlike that heroic scalp you took after 3 green candles and 1 Red Bulls. Send this to a trading buddy who definitely thinks their last win means they are market profit. Help them before they bless another breakout with "trust me bro" energy. Feel moved? Click thanks button. It's like tipping your brain trainer who just wrestled your dopamine into a chokehold. Or, if you are the generous, caffeine-enable type, buy me coffee. I promise not to spend it on emotionally charged trades or overpriced scalp entries at resistance. Probably. And if you want to support this madness in style, join my Patreon. We have got spicy tiers like the Green Candle Cult, where we chant risk-reward before every trade and burn Saj when we feel too confident. The Overconfidence Recovery Room tiers, daily affirmation, awkward confessionals, and virtual cold showers for your trading ego. And the Elite tier, lot size anonymous for traders who click double up and then ask, wait, was that wise? Whatever tier you join, just know this. Confidence feels great, but consistency pays better. So keep your edge sharper than your sarcasm and your position size smaller than your pride. Catch you in the next episode, unless you overtraded and need a timeout.